Hello and welcome to episode 4 of our free masterclass series. In this class, we are going to be discussing about OB entry and target. Now, we settled for this topic because we posted a poll on the YouTube and you guys massively voted for this topic. But let me make it clear that OB entry and target is not a holy grail. Okay? You need to stack the odds in your favor before you talk about OB entry or targets. What do I mean? I mean that there are other factors that you need to bring together in order to have a perfect trade setup. Okay? Beyond the sniper entry on your lower time frame, the market demands much more than just taking an entry on your lower time frame. And therefore, you need to understand certain confluences that you need to master and apply to your trading. And that is what I want to show to you now. I'm not going into it. I'm not going to be discussing about them because my job is simple, just to show you the sniper entry on your lower time frame. Alright? Now, these are the essential confluences that you need to master and apply them to your trading or to your trading plan for you to have a good success in your trading. Okay? So number one confluence, which is very, very important, is market structure. Okay? Now, if you have no understanding about what market structure is or how to correctly read the structure of the market to determine the trend you are in, then you have no business just yet talking about OB entry and targets. All right? So you need to master how to read structure in the market. It is the cornerstone of the market, and what it does not matter the strategy you use, regardless of the strategy or whatever indicators you are using. If you do not understand how to read the structure correctly in the market, then OB entry and target will not make any sense to you. The second thing you need to understand and master and apply is the structure phase. Beyond reading your structure correctly in the market, what phase of that structure are you in? For example, if you are in a bullish structure, now in that bullish structure, are you in the retracement phase or you are on the impulse phase? You need to understand that. Are you on the impulse phase or on the retracement phase? You need to clearly understand that. Now, the third thing is liquidity. Where is the money in the market? Like I have been saying, that the market moves because of liquidity. Large institutions will not move price until there is liquidity to be swept. Okay? So you need to understand that. I've told you there are 6 liquidity trap zones in the market. I mentioned them before in our previous videos. So you can do well to go back to our playlist and find that out. Okay? I'm just doing a general overview of the essential confluences you need before you can talk about OB entry and targets. Now, the next thing is you need to understand your discount and premium zones. Your discount and premium zone is your goal posts within your trading range. It is your playing field. Okay? Your particular goal posts. Okay? And next is the point of interest. you need to understand how to choose the most valid point of interest. Okay, for us here it is order block. Well, for you it could be a fair value gap, it could be mitigation block, it could be breaker block, it could be some sort of point of interest that you look at. But ultimately what you need is to make sure your point of interest is valid enough. All right, now before now you can talk lastly about entry and target. That is where and how to enter and exit the market. These are the conferences you need to stack in your favor before you start talking about having a sniper entry on the lower time frame. All right, so I want you to know that. Now, one more thing I want to let you know is this: when you are mapping your structure, please make sure you use the higher time frame. If you don't know the perspective of your higher time frame, by the time you scale down to your lower time frame, you'll be completely lost. And this is where many traders are having their accounts blown up. All right, you need to understand your higher time frame perspective. Do not go straight to your lower time frame and start reading structure on the M15, on the M5, and you take trades from there. All right, it is not a good practice. All right, so get to your higher time frame. Your higher time frame could be your daily time frame, your weekly time frame, your H4, your H1, depending on the type of trader you are. But you need to have a general picture of what your higher time frame is doing. Your higher time frame trumps every other time frame below it. Now, when you have used your higher time frame to determine your structure, you need also to use a higher time frame to mark your point of interest. Very, very important. All right, don't go down to M15, M5 and all that to mark a point of interest and enter trade from there, because the point of interest of your higher time frame carries more weight than the point of interest on your lower time frame. I want you to understand that. Okay, so you need to mark out your point of interest using your higher time frame. Now, as soon as price returns to that your point of interest and taps into it, you need to drop down to your lower time frames. It could be your M15, could be your M5, could be your M1, but you need to drop to your lower time frames. All right, let me give you an example. If, for instance, now you find you are using H4 as your higher time frame, and you find that H4 has produced a valid point of interest, as soon as when you mark that point of interest, as soon as price returns back to that point of interest and taps into it, you scale down to perhaps your 1 hour, your 15 minutes time frame. But I want you to know something, guys. Let me reveal this secret to you today that you may not find for free on the internet. Okay, now whatever time frame that you are using, make sure that your H4 breaks structure. Your H4, please make sure it breaks structure if you want to have high probability trade setups. All right, if you want to have high probability trade setups, make sure your H4 breaks structure, and then you can follow price from there. Okay, now when you scale down to your to your lower time frame like the M15, what do you want to see there? Let me show it to you. Now here is what you want to see on your lower time frame. I'm going to still come back to this to show it to you when we get to that point. All right, but these are the only two patterns that we trade using the smart money concept. All right, these are the only two patterns. This one is for the downtrend. It is exactly the opposite for an uptrend. All right, so these are the only two patterns you look out for on your lower time frame. Now take a look at this first pattern All right, take a look at this first pattern. Okay, price went up and tap into some form of point of interest. All right, and then rotated back down. Okay, to take out this previous low here. All right, and then once price breaks structure, you can be sure that there is an OB that will be left behind. All right, now this OB here, all right, as price is rotating back up, this OB here is a point of interest. All right, it's a point of interest, but it is a risk entry. Why is it? It is because smart money, this break of structure here, this very break of structure here, could simply be a liquidity grab. It could be that the institutions just drove price down to sweep this liquidity here, and immediately after sweeping the liquidity here, they can push price up to continue going higher. All right, you cannot know. There's no way you can know that. Okay, and so this point of interest here is a risk entry. This is a risk entry, guys. Why is it a risk entry? It is because there is no form of confirmation to show to us that this point of interest is going to hold up price. I need you to understand that. Okay, now, but if you're an aggressive trader, you can decide to take your trade from here. There's nothing wrong about that. If you're aggressive, if you are the type of trader that does not bother about whether your account is blown up or not, you can decide to take your entry from there. All right, but if you are a more conservative trader, all right, well, you may need to wait for a confirmation. All right, and that confirmation will come after the break of structure the second time, and you will have your OP here, and then you can decide to take your OP here. This is a safer entry. Why is it? It is because it is now confirmed that the institutions want to drive price lower. All right, and so you can now take your entry from that point. The same thing, guys, with this other pattern here. This one grabbed liquidity. This first pattern grabbed liquidity, but this one didn't grab liquidity. This is swing failure. All right, it's known as swing failure. All right, it didn't grab liquidity. It merely went up and printed a lower high to this when compared to this high here, and started dropping from there. Now remember, each time price breaks structure, it will leave behind an OB. So this is the OB. Again, it is the same concept. All right, like the first one, or as the first one, is the same concept. Now this OB here is a risk entry. Why is it? It is because this break of structure here could simply be a liquidity sweep. All right, the smart money could push price down to patch the liquidity resting below this low here, only for them to drive price up again to continue with the uptrend. No one can tell. We trade what we see. We are trading probabilities in the market, my friends. All right, so we want to stack the odds in our favor. All right, so this is a risk entry. But again, if you are aggressive, if you're an aggressive trader, you can decide to take your trade from here. All right, it's a point of interest nevertheless. All right, but for a more conservative trader, you may want to wait to have another break of structure to confirm to you that price was actually wanting to go or prepared to go further down. All right, so these are the two patterns that we trade in the market and that you need to pay attention to. All right, please put that at the back of your mind. Now let me get to the charts and show you exactly what I mean. Now guys, this is pound dollar, and here is weekly time frame. All right, this can be your daily time frame, it could be your H4 like I told you, but I've just decided to use the weekly time frame to have a better picture of what the market is about to do. And as you can see, when you get to a higher time frame, what you should be interested in is your current swing in the market. All right, this your current swing is what should attract your attention. All right, this swing here is what should attract your attention. All right, this current swing, very important for you to look at it. All right, and know what to do in the market. This current swing is what we look at now. As you can see, now price was making higher high, higher low, higher high, higher low, and so on. And then you find price break structure, and as you can see, we are clearly in a bearish move. As you can see, we are in a bearish move. All right, that is what you want to find out on your higher time frame. Now, even though you are on a bearish move, the second point I told you about, remember that second point when we started, I told you beyond understanding or knowing the structure you are in, you now need to determine what phase of that structure are you in. What phase? Now we are in a bearish structure. What phase of the bearish structure are we in, guys? We are in a retracement phase. As you can see, look at it, price is trying to go back up. It's retracing back up, and so we want to take advantage of this movement going up. Do you understand what I'm saying? Even though this is a retracement, one good thing about smart money concept is that you can trade from both sides of the market. What do I mean? You can trade pro trend and as well as counter trend, if you understand what you are doing. Now, this advantage that we want to take in trading this retracement is a counter trend trade. The same rules apply. It's just that when you are taking a counter trend trade, you do not aim for 1 to 100 RR. All right, you do not aim for 1 to 50 RR. You must understand that this is a counter trend trade, and that price can turn back at any time to continue with the real trend, which is bearish in this case. All right, I want you to understand that very, very well. Okay, so right now we want to drop down to our H4 because we now know we are bearish, and that the phase we are trading and we are trying to find setups on is the retracement phase. All right, so I'm going to drop down to H4 to see what is happening there. All right, so let's get there. All right, guys, so here we are on H4 time frame. All right, now these lines that you see, these vertical lines that you see, they are period separators. Okay, period separators. From this vertical line to this vertical line is a price action data of a full 1 week, 5 days. All right, so you need to understand that is period separator. Remember, I told you that there are 6 trap zones. In our previous videos I mentioned that there are 6 trap zones that you need to pay attention to in the market. Let me quickly run over them so that you can understand. Now, number 1, liquidity trap zones. Number 1, liquidity trap zone. All right, number 1 liquidity trap zone is, so the first liquidity trap zone I need you to understand is equal highs and equal lows. All right, number 2 is trend line liquidity. Number 3 is previous day's high, previous day's low. Number 4, previous week's high, previous week's low. Number 5, previous month's high, previous month's low. And number 6, previous year's high and previous year's low. But the previous year's high and previous year's low mostly is applied to position traders. I just want you to know that. So now, here is the price action data for 2 weeks ago. All right, this is the price action data for 2 weeks ago. This is the low of the previous 2 weeks. That's 2 weeks ago. All right. Now, because this low has a huge liquidity below it, all right, because it is the previous week's low and it has huge liquidity below it, I'm expecting the smart money to come to rate that low lower. So I want to make sure that this low is rated. All right, this low, we need to find out the, let me see, this low here is let me see, the low here is 1.24713. I want it to be correct. 1.2713. all right, 713 24713. I hope 24713. I hope it's correct. I hope I remember that. 24713. Okay, so that is the low. Let's see. Okay, so that's the low of the previous 2 weeks. All right, now as you can see, now price has broken structure here when it was going up. Remember, your H4 time frame is key. Look at it. Price broke structure there. Can you see that, guys? Price has taken out structure there. Price has taken out structure there. Okay, so bullish break of structure. All right, now leaving this OB here. Can you see this OB? Please, I want you to follow me. This is crucial. I'm slow about it so that you can follow me very, very well. All right, so that is a point of interest. All right, drag it out. Now that point of interest, look at what happened when price broke this structure here. It returned to that point of interest. All right, meaning that this point of interest is infected. All right, it is no more a fresh point of interest. Nevertheless, you must put into consideration that this is the low of 2 weeks ago. This low, very important. All right, because if price is pushing up, remember on our weekly time frame, we saw that where we are in that bullish structure is in the retracement phase, and the retracement phase is going higher, isn't it? And we want opportunity to buy, isn't it? Don't forget about that. We want an opportunity to buy. Now, each time you want to buy, the smart money wants to push price higher. When price opens, all right, and it will first create the low of the day, or the low of the week, or the low of the month before pushing higher. They must first clear, or most of the time they will have to first clear the low of the previous week, or the low of the previous day, or the low of the previous month. They have to clear it first before they push price higher. If they are coming down, if it is a bearish condition and they want to come down, they will need to first clear the high of the previous day before they now start moving down, or the high of the previous week, or the high of the previous month before they start moving down. I want you to understand that that is a completely a mentorship course for you to understand. All right, but I want you to bear that at the back of your mind. Now, since this is our weekly low, all right, this weekly low, now smart money has to push price below this horizontal line, this weekly low, before they can push price higher, since we want to buy the market. All right, so anything below this very horizontal line here is a right place for us to take our trades from. All right, so they will have to clear the liquidity below this low, and then inside of this point of interest, that is where we are expecting them to to push price higher. Do you understand that, guys? Now, let's use the replay tool for me to show you what we are talking about now. This is your H4. Now, you want to wait for price to tap into this, isn't it? Now, let us play price. Let it tap into it. Now, can you see that? Price has tapped into that very OB and has gone below this previous week's low. Can you see that? This is one secret that I'm sharing with you now. It's a secret of the market that I'm sharing with you. So if you have a point of interest that in previous days low or high has come into that point of interest and has made it to be infected, it's no more a fresh point of interest. Remember that daily low or weekly low, if price weekly low, daily low, or weekly high, daily high, it depending on the direction of the market, they will take it out before they move. It's a secret I want you to understand. All right, now price has come into this your OB now, as close, as gone below, even as close below this previous week's high, low. All right, now I want to move to M15 from this H4. Remember, the first one was your weekly time frame. Then now I scale down to 4 hour, okay, to find my point of interest and to find a break of structure. All right, now I'm going to my M15. Please follow me. This is crucial. Now this is your M15. Price is at this point of interest. As you can see clearly, price is below this horizontal line, this previous week's low. All right, now take a look. You must know how to read your structure for you to be able to trade the market successfully. This is your high. This is your swing high on the M15. This is your swing high. So draw that out. All right, and here is your swing low on the M15. All right, here is your swing low on the M15. This is important for you to do. Why is it? We are looking to buy this market. If price should break below this point of interest here, downward, and come out of this very H4 POI, it therefore means that this point is our invalidation point. It means that our expectation for price to go higher has been nullified. All right, it has been nullified. We need to start having a fresh plan, okay, on how to approach the market. But ultimately, because we want to buy this market, we want to see price break and close above this point. What are we looking for, guys? What are we looking for on this your M15 time frame? Let me show it to you again, what we are looking for. So guys, this is what we are looking for on that M15. I've explained this to you before. This pattern, this kind of pattern, these two patterns is what we are looking for. The opposite. It is the exact opposite in the case of an uptrend. All right, these patterns, either of these two patterns is what we are looking for. All right, on your M15. Please take note of that. It is crucial. So now we are looking for price to give us that pattern that I just showed to you right now. Okay, so let's play price and see what happens. You have to be patient, all right, because price is still within our swing high and our swing low, the M15 swing high and swing low. So we need to be patient and let price do its thing. Okay, let price do its thing. Can you see that? Can you see that, guys? Now price has broken that structure, but it has not given us the pattern that I showed to you. These two patterns that I showed to you, it has not given us that pattern. We need to see that pattern. That pattern is a double break of structure. All right, double break of structure in any of these two patterns I showed to you. All right, so but price has violated structure here and has left this OB. Don't forget about that. There is this OB that price has left because it has violated the structure to the downside. Okay, it has violated the structure to the downside. So let's try and drag this out. Okay, because that is an OB. It's a valid OB. Why is it? Because it has broken structure to the upside. All right, now let's continue to play price. We want to see that pattern, that double break of structure is what we want to see. There are two ways by which you can trade. You can have a sniper entry on the lower time frame. I'm going to show you the first way now. All right, then I will show you the second way. All right, I'll show you the second way. So let's continue to play price. Now, can you see what is happening here, guys? You must know how to read your structure correctly. Now, price broke this structure once and went up, created this high, and then retraced. Can you see that retracement? And went back up to take out this high. Can you see? Can you see this high here? It took out that high. All right? It took out the high. So now we have that our pattern, the first pattern in place now. Okay, this is double break of structure. This is one break, this is second break of structure. All right, remember when you broke structure here too, there is an OB sitting here. Here is an OB, guys. Here is an OB. All right, that's an OB. Now, for you to be able to validate these two OBs, which of these two OBs will hold up price? How do you validate that? And I'm going to show it to you now. All right, now you go up one time frame higher. We are on M15 right now. Now I'm going to go to 1 hour to validate these two OBs. All right, let's see, because the OB that has a fair value gap, a clear fair value gap, you cannot ignore that. All right, you can't ignore that. Let's get to the 1 hour. Now this is the 1 hour. Now this is our 2 points of interest. It's our 2 points of interest. Remember that. Now take a look at this first point of interest. Do you find any remarkable fair value gap there? Can you find a significant imbalance there? Certainly no. Now take a look at this other one, this other POI. Can you find a significant imbalance or fair value gap there? If you don't understand what we talk about when we talk about imbalance or fair value gap is a coinage of ICT. If you don't understand about imbalance, please go back to our playlist, pause the video, go back to our playlist and listen to the video on this imbalance. All right, now as you can see, you have this clear imbalance here, as clear as day. All right, as clear as day. Anytime you find an imbalance beside your OB, that OB becomes a high probability OB. I want you to understand that. Okay, high probability OB. So this OB here, this first OB is not significant to us, so we can take it out, take this out. So we want to work on this OB here. This very OB is significant. It's significant to us. Why? Because it has an imbalance beside it on the H1. So we go back to that our M15. Let's go back to that M15 now that we have validated our POI. All right, now let's play price. We want price to tap into this POI. All right, and for us to take our trade from there. You can as well scale down to 5 minutes, 1 minute, 30 seconds if you like, but I'm going to stop at this M15. All right, so let's play price and see what is going to happen. This is how long you can be waiting for a particular setup to play out. All right, patience is key in this business. If you are the impatient type, then you will always be on the wrong side of the market. All right, now let us frame this trade. Let's frame it. We want to go long. All right, we want to go long, so we can easily frame this trade since we want to go long. And sorry guys, sorry about that guys. Sorry guys, they say I moved that OB. I have moved that OB. Let me take it back. Okay. Remember, this is the OB. I want us to be very precise about this OB. Aha. Okay. That's the OB. All right, so we want to frame it. We want to go long. We want to take price from here long. Okay, so this is our okay, and where's our target? We want to target this low, this high here. We want to target this high. Okay, want to target this high, and that will give us 8.48 RR if it goes our way. All right, if it goes our way, it will give us 8.48 RR. So let's play price. Let's play price. It has tapped into our OB. Can you see that, guys? Coming back to tap into it. Now let me stretch. Let me take this thing out. All right, so let's continue to play price. Can you see that, guys? It has tapped in, it smashed our take profit easily. All right, now why I've told you about the point of interest, the entry. Now why, how do you determine your exit? Your exit, don't forget, must always be the next swing high or swing low, depending on where the trade is going. Your next swing high or your swing low, all right, is where you should exit the market or take partials. All right, but in this case we are playing counter trend trade, and therefore this is the most sensible place for any trader to take its take profit in full, because we are counter trading this market. We are counter trading this market. All right, so you need the swing high that has an opposite point of interest that you need to take your profit from. Okay, guys, I hope you get something from this video. this is the way. Because of time, I will not be able to go to the second example to show to you, but I hope you've gained something with this one. Okay, and you may want to have some questions you want to ask. Like I told you, you need to send your questions to the class if you want your questions answered in the class. But if your question is the type that you feel is not going to be okay or sufficient to answer in the class, then you want me to be with you on a Zoom meeting, then we can arrange that so that you can ask your questions. All right, you are free to ask any question bordering on OB entry and targets. All right, because that's what you guys voted for. Don't go and start asking me about to do everything, all the conferences I've told you about. All right,